Good morning. Welcome, everyone. I'm DTN Farm Business Editor Katie Dellinger. I am your host for our DTN Ag Summit Series event, Navigating the Cattle Market's Ups and Downs. I'm really looking forward to today's program. We're going to be really digging into a lot of the issues going on in the cattle market right now. Prices are high. The forecast for grass looks good based on the drought monitor, but there are a lot of things producers can be doing to manage their risk, to really be able to look at the markets and understand what is going on in that space and how they can capitalize on these good times to try and see what happens and really prepare themselves for the cyclical nature of agriculture. We've got a great program today, but before we get into the speakers, I want to do a few quick housekeeping things. We're excited to have everyone with us today. When you have questions, please drop them in the Q&A portion on the bottom half of your Zoom screen. That'll help me prepare everything to ask our speakers. We've got two wonderful presenters lined up today. The first is Cody Dvorak. He's Rabo AgriFinance's Ag Insurances Manager. He's going to be discussing how you can leverage LRP on your operations. And then we're going to have DTN's own ShayLe Stewart, our livestock analyst, to really give a cattle market outlook and really fill in some of that picture of what you should be thinking about market-wise. So please, we'll be doing Q&A with both of those experts, and I would really like to have the questions coming from our audience members so we can get the information that's most valuable to you into our program. So please drop those in the Q&A. Please feel free to use the chat function as well if you have other comments for either our staff or for other attendees. We like this to be as interactive as you would like to make it. So without further ado, I would like to introduce Cody Dvorak, Rabo AgriFinance's Ag Insurances Manager. Cody, thank you so much for joining us.
Thanks for having me, Katie. This is a pleasure to be here. I'm so glad that everybody could find some time this morning to meet and discuss this topic. I think we have some great information to share with people. And if you don't mind, I'm just going to go ahead and jump right into it.
That sounds wonderful. Thanks, Cody.
Screen shared here. Oops. And can you just confirm that you can see what I got, my presentation here?
Not yet.
Yes,
we have it now. We have it.
All right. So we today are going to be talking about livestock risk protection. As Katie mentioned, it's one of the many products we offer here at Rabo AgriFinance. Aside from being a large ag lender in the United States, we do offer other products to support agriculture, including insurance, other marketing services, and just some analytics and stuff like that. We are located pretty much everywhere across the United States. There's generally going to be somebody employed by Rabo near you, although we do not necessarily have physical locations in every spot. We make ourselves accessible by our vehicles and online tools. Additionally, we're a subsidiary of Rabo Bank, which has been a global banker for over 125 years. Myself, I've worked in insurance since I've been out of college. I've been working in crop insurance and livestock insurance since 2012 and have just enjoyed this space and industry immensely. Great people to work with everywhere. Among the other livestock policies that are available, you can see that today we're going to be talking about livestock risk protection. That's available for feeder cattle, fed cattle, swine, and lambs at some points, at some times. The other two products available under this suite are livestock gross margin, which is available for fed cattle and dairy cattle, and then dairy revenue protection. We're only, like I said, only going to get into livestock risk protection, but if you do have questions on either one of these other products, feel free to contact me after this presentation. My contact information will be at the end. I'd be happy to have a conversation with regarding any of these for you guys to kind of dial it in and make it a little more personal to your operation. So getting started with livestock risk protection, I think first and foremost, we need to define really what that is, because livestock risk protection paints with a pretty wide brush. But really what it does is it protects you for declines in future market value. So it really only has one peril. It does not cover for the loss of life, theft, or anything like that of the actual cattle. It's simply covering you for pricing movements. The price movement as well is based off of the CME and the AMS. And so when we settle prices at the end of the policy, we do not use the price taken by the cattle owner. We could easily get into some fraud cases in doing so, so that it's we kind of have to settle claims based off of the same measuring stick we used to set the values, and that's going to be the CME and the AMS. Livestock risk protection is available to all cattle owners that are eligible. There are a few little stipulations that could make an individual ineligible for this, but we don't see that too often. Additionally, if you only carry a portion of the share of a herd, you can carry the herd that you are responsible for, and that could be with the exact same coverage, different coverage, or no coverage at all with the additional shareholders. So there's a lot of flexibility there. They do have a limit of 12,000 head per endorsement and 25,000 head per year on the LRP. So that's something that some producers may run into as a little bit of a snag, maybe towards the end of the year, or partially through the year, depending on the size of their herd or yard. Additionally, this is available every day, roughly from about 4:30 p.m. to 8:25 a.m. the next morning, with some exceptions for days when the CME is closed, or if we get limit movements up or down, as well as any other significant market disturbances, like cattle on feed reports. They have a tendency to swing the market. And with that being known, it's hard to cover with an insurance product. All right. So right now, I just kind of want to walk through the insuring process, because it does take multiple steps to get coverage in place for your cattle. And we'll just kind of make sense of this so that you know what you're up against when you identify prices that look attractive. The first step is obviously the application, like many products similar to this. And what we're going to do with the application is use it to determine the eligibility for coverage. We'll take some basic information that's listed here, put it on the application, submit it to the insurance companies, and we'll then find out that if everybody in the list of ownership is eligible for the policy, make sure that there's not a policy elsewhere with another agent or insurance company. And once we know that this is in place, we've now got our foundation for our livestock policy. No coverage is in place with this, but we do have a policy in place. So when we're looking at now putting some insurance into place on this policy, we're going to first of all be taking a look at the prices available for our commodities, fed cattle and feeder cattle. Feeder cattle prices come off the CME feeder cattle contract. I'm not going to get too into that, but you can kind of see below there the factors that they're using to determine the pricing on this. Across the bottom as well, there's a table that shows the pricing adjustment factors for these specific types of livestock. So where we see up here that they're using 700 to 899 pound steers as the basis for their price, we can look, I don't know if you can see my mouse, but down on the bottom left-hand corner in the 600 to 1,000 weight steers, we're valuing them at 110% or 100% of that value. The lighter weight steers from 100 to 599 pounds would have a value 110% of that of the steers there. And you can see how all of these other values will play out based off of that one value, that one measuring stick that we're using. For fed cattle, we're using, this is anything over 1,000 pounds up to 1,600. We're using 5 area weekly weighted reports from Texas, Oklahoma, New Mexico. We got one from Kansas, one from Nebraska, one from Colorado, and an additional one from the Iowa, Minnesota area. They're using over 80% choice steers to make the determination. And this is something that you can, there is a report out there that you can definitely go find this value on where it is being pulled from. Now, with these two values that we've just discussed for both feeder and fed cattle, we understand that the CME and the AMS may be slightly different from your local market. Your local market may be offering a premium or potentially the opposite. And with the insurance only paying off of these measuring sticks, the CME and the AMS, you might be feeling a little out of, say, compliance, or that it just doesn't represent what's going on in your area. And we highly encourage people to kind of take a look and see how these numbers trend with their local area markets. We would hope that they're fairly representative, and that if you see a movement on the CME or the AMS, that you're also going to see a similar movement of types in your local market. So this can still be a tool, even if the numbers aren't exactly the same between the reports and your local market. So now that we've got the prices identified, they will be identified for a number for each one of the feeder cattle types and the fed cattle, and they'll be offered in a number of different insuring periods. You can see towards the bottom that we've got weeks extending from 13 out to 52-week periods, usually in 4 to 5 week intervals. So you can select any one of those intervals, and each will have a different value for the cattle, depending on their weight and type. But at this point, this would be where we determine that, yes, this is something that's worth insuring. The cattle are valuable. We're in a great market. And I just don't want to see this go south. So now's the time for me to cover that. So we'll use those prices, determine a coverage level that we want to use, the number of head, and this form, once submitted, will be when coverage is actually added to the policy. So you'll remember that when we did the application, we kind of created a foundation for a policy. Now we're actually starting to put up some walls on this thing, because we've got some coverage and we're going to protect the contents. You can have more than one SCE or special coverage endorsement on the same day. You, for example, might cover 500 feeder cattle at, the 100 to 599 pounds, and another number of them in the class 2, the 600 to 1,000 pound range. So a lot of options there. We just can't write 2 endorsements for the same type of cattle in one day. So need to make sure that we're getting the totals correct when we're writing those. And I will remind everybody of that time period. Again, it's a roughly 3:30 to 4:30 any Monday through Friday that the prices come out, and then all coverage has to be entered by 8:25 the next morning. So that does create a narrow window for purchasing, in which myself and any customer needs to be engaged with one another, because we have to get paperwork signed and returned, which we usually do through DocuSign at Rabo Ag, which makes things very simple and instant. But we do need to get those done timely, otherwise coverage cannot be placed. So now, once we've got the coverage in place for the defined interval of, say, 47 weeks, we will wait out that period. During that period, you've got the option to sell your cattle up to 60 days prior to the end date. And then additionally, for fed cattle, you can retain them for up to 60 days after, as long as they're sold within that period. Feeder cattle do not need to be sold by the end date. They can be retained and then fed out, or just kept in the herd for future use. Once the end date is reached, the insurance company will compare values, the ending value compared to the covered value. If the ending value is less than the covered value, we obviously owe you a claim. The insurance company will send out a notice of probable loss with some of that claim information on there. It'll need to be signed by the customer and then returned with the documentation showing either proof of sale or proof of ownership. Proof of ownership is kind of a wild and broad topic there, if you will. I've seen quite a bit of different examples of this, from vet records to feed records. Even for some sheep, we've used shearing records as proof that they do actually own the animals. Additionally, we can get signed statements from third parties helping to prove this, as we do need ownership, because allowing for the purchase of this product without ownership of the cattle could definitely ruin the program or water it down to the point where it's not quite as valuable to those that actually need it. So after the claims process, if there are no claims, the customer will be billed for the policy. Billing comes at the end of this policy, which is really nice. It was previously something that needed to be paid for up on the front end. And the insurance companies really found that that was kind of a sticking point for customers to even buy the coverage, because a lot of times they'd have to come into an agent's office at 4 o'clock or later in the afternoon and before 8:30 the next morning to get a check into the hands, the application written, and it just wasn't, it was a little prohibitive to the program. So moving the billing to the end has made that huge, because we can write the coverage without having a person present. And then additionally, it gives the customer an opportunity to pay for the coverage with the proceeds after the sale of their commodity. Much like crop insurance, just makes things a little more convenient and timely. Additionally, if there's any claims that are paid, they will be applied to premium first if the premium is unpaid, which I think most people are fine with. Additionally, one of the main attracting points for this policy is that it is subsidized. So with the premiums, the RMA is helping out with anywhere from 35 to 55% of the premium expenses. So that is very attractive. Obviously, the larger subsidies accompany the lower coverage levels, and the lower subsidies accompany the higher coverage levels. But however, most people want the higher coverage level just due to the value that it provides. Some of the benefits that we're seeing from livestock risk protection is just the stability that it can provide. As you know, from our position as a lender, we like to see stability. It just repayment capacity is not anything we want to hide from. So this is something that helps out with that. Like the last point there says, if this is something that you're regularly using in your operation, it could allow you to entertain higher prices for up to 52 weeks after a crash. I mean, if you had been buying coverage as your cattle come in, and we placed a endorsement yesterday and the market crashes tomorrow, well, you've got another 52 weeks of good pricing to entertain because of the insurance you've taken out. It does allow you to participate in positive market movements as well, with this being a product that protects you for downward movements. Any upside is yours to keep. So if the market just keeps rallying and rallying, you can entertain all of that upside movement, but know full well that if anything were to go bad amidst all of that positive pricing, that you're covered for it. So it definitely encourages you to make good sales when the opportunities arise, but allows protection even past that. Like I mentioned earlier, premiums are due after the anticipated sale of cattle. So theoretically, the money should be available. It shouldn't be a hard hit out front where you have to borrow it. And lastly, LRP does not have to be the only product you use. We actually encourage you to use it as a suite of products, something that can help offset other marketing options, or using other marketing options to offset the expenses of this product as well. It's just, so it allows for diversity. I guess that's what I'm trying to say there. And don't be afraid to explore some different options. I mean, we'd be happy to have conversations with people, but there are some creative options that you can do out there to reduce expenses, increase coverage, and keep your business moving forward. The last little thing I want to add on the benefits of this livestock protection, generally we see premiums right around 3% of the total value. And I understand that expenses add up, but when I look at this, I think about it in terms of going to, yesterday I went to the local coffee shop, got my coffee, got my receipt, and noticed that there was a 3% charge for using my credit card. And I was happy to pay that 3% fee because it was convenient. And it's a relatively small number. But when I put it in terms of this, it's still 3%. But that 3%, which is equal to a credit card fee, could be what saves your ranch or feed yard in an extremely detrimental event. So try to put it in perspective like that and think about what it can actually do for you in the long term, in the big scheme. A lot of people want to see an instant return from it. Okay, if it's costing me $7, when do I start making money? Well, you're obviously would start making money after about an $8 reduction in price, but it's the next $200 below that could, is where the crippling effect could occur. And that's what we don't want to see you hitting, is the ultimate lows. We know a lot of guys can weather small price changes, but we want to be protecting folks for those large losses that could really impact their lives moving forward. With that, I feel like I kind of ran through it fairly quick. I'm hoping there's some questions out there, or if anybody's got anything that they want to discuss. We do have case studies available through some of our partners that we work with. Additionally, we can get quotes out to anybody that's interested, or anything else that may be of interest. My phone number and email address are on the screen here. You can feel free to email me at that address or call and text me at the number listed there. I will be hanging around here for the next couple hours, and happy to entertain any questions on specifics that some people may have about their own operation if they don't want to ask the questions here on the webinar.
All right, thanks, Cody. We do have a couple of questions in the chat already. I want to encourage everyone who is watching, please drop those questions in the Q&A section for us. It helps us keep track of what we've already answered. I'm going to go ahead and start off with the first one. It says, do lenders in general offer lower loan terms if borrower is using LRP, or does LRP more turn a borrower who might not be approved for loan into one who is approved?
We can't directly offer, as a bank, we cannot directly tie a cheaper interest rate, if you will, to having this product purchased now. If you are, it could be a situation though where having this product does make you more enticing to a lender because the repayment capacity is there or is proven to some degree by having this coverage in place. So it might not make your lending relationship better, but it could get you qualified for one if things look pretty tight otherwise.
You know, I look at that and I talk to a lot of bankers and part of my job, and they're very risk averse people. So anything you can do to sort of limit that downside, they tend to like and approve of. Excellent. One thing that you and I talked about a little bit, Cody, as we were preparing for this program was why buy insurance and why buy now? I think you really made a really great point for us about, you know, when that's what the purpose is and why you use it.
Yeah, I mean, the simplest way I can put it is that valuable things are worth insuring. Plain and simple. Your house, buy a brand new house, it's worth insuring on day one. You don't want to wait till you watch the price of value of houses to start going down to place that coverage. Same thing goes with your car or anything else, or any other business asset that you might have. You want coverage on those things because they're valuable to your operation and ultimately make you money in the end. So I really think that valuable things are worth insuring. Two, do it now. If they're right now, we're seeing things that cattle are more valuable than they've ever been. So insure them, and they might not be as valuable as they were a week and a half ago. I mean, I did a quote for a guy. He wanted to see where the price went, and it went down $10. So I would have been paying him a claim if we would have wrote the policy, but he wanted to see where it went. If you feel good about where prices are, don't be afraid to insure. If they go up, sell the cattle at that higher price, but don't wait for the price to go down to where you want to be paid for a claim before you insure it.
Right. You can't apply for insurance after you've already hit the deer.
Right. Exactly. Yeah.
Yeah. Yeah. Okay. One of the questions we have from a viewer, are there any changes coming in 2025? And can you run an example for, say, an 800-pound steer?
So a lot of the changes that are coming through for 2025 just kind of make things a little bit easier, and just a little bit of the claim situations. We define what some acceptable proof of ownership is. There is some changes that would allow somebody to sign the coverage endorsement a little earlier than in the past. And then having the ability to sell 60 days after the sales closing, the ending date, I think is a nice change as well, because you don't have to make sure that you're moving them all. Because if the price is down on that last day of your insurance period, you'd hate to have to sell them just because the price is down and it's the last day. It's nice that they give you a little bit more of an opportunity. And then the last thing is more on my end. It's an agency thing that I can submit paperwork after 8/25, which is nice because we have to have everything, the data entry done by 8/25. So sometimes just getting stuff scanned and whatever takes time that will allow us now to be focused more on getting your coverage entered by that 8/25 deadline, which really isn't a problem because Most of the customers we work with are very engaged in the evenings, and that's when they want to get it done. Most people don't want to be working on these ticky-tacky things first thing in the morning.
Okay, so, we talked a little bit, it seems like LRP, it's been around for about a decade, but there have been a lot of changes over there to help make it more accessible, more user-friendly. What are some of the reasons or some of the things that you think have really helped encourage the popularity of this product? And do you see more producers really wanting to take a look at it and have some interest in it?
Yeah, I mean, for one, with the values that we're seeing of cattle, guys are far more interested because valuable things are worth insuring. But two, the changes that they've made as far as like moving the premium to the end of the insuring period was huge. Additionally, they increased some subsidies and made it more affordable to the producer. And obviously that's going to have an impact. So I think between those two things, really, that's become a driver for purchasing it. Additionally, I think we're seeing value as markets with the rest of the world become more and more volatile and unpredictable. These insuring products are becoming more valuable and necessary than maybe they were in the past. Um, you know, a number of years ago, you wouldn't necessarily be seeing drastic movements like we have in the past couple years. And I think that's of concern to people.
Okay, so kind of a second part of a question here. Can you run an example for us if I wanted to say insure an 800-pound steer, maybe for the 14 calendar day deal that goes on?
Yeah, I'm going to pull up, I have a quoter on my phone, so I'm going to be looking down here real quick. And this is something that we can get into any one of our customers' hands. But it will allow you to run LRP, LGM, and DRP quotes. So if I just hop in here real quick, I'm just going to do an 800-pound steer. And then we'll pretend like we're going to sell him sometime in November. So I ran a quote that goes out to December 11th. That's a 26-week endorsement on steers weight 2. That would get us that 800. And right now the coverage price for that critter would be $256.80. That's the highest that we could cover it. And that would run you $7.25 per hundredweight.
Okay, so that seems like it would ensure a pretty good amount of risk if the cattle market were to take a dive by the time you're ready to sell that animal.
Right. And there's no bottom end on that either. So, if it, I don't know what to speculate that could go on.
We'll
COVID
have we'll
too.
have ShayLe
Yeah.
do that later.
Okay. Yeah. We'll lean on her for that. But, if there was something that caused a huge disruption, I mean, that God forbid prices went down $100 a hundredweight, you're compensated for that whole value. There's no limit of, we'll only cover up to $30 in the event of a loss or something like that. So when you're buying that $258 of coverage, you're buying a full $258 of coverage, even though most of the movement's going to be right up towards the top.
Okay, that's really good perspective. One of the other questions we have in here, what are some of the other risk management products you would recommend using with LRP?
I'm not gonna, I've seen some of our customers use additional puts and calls to kind of create a collar, if you will, of where they're willing to take prices. And that's one strategy. But as an insurance specialist, I would hesitate a little bit to advise too much on those marketing options, but we do have an amazing team here in our St. Louis office that would be happy to help any of our customers with some of those ideas. Additionally, we pair the quoter that I just used. We work with another group, Ag Hedge Desk, out of Minneapolis for some of our analytics and stuff like that on these livestock products, and they're able to help us out as well. Fantastic guys.
Good to know. So another question from an attendee. Among current customers you've worked with using the insurance, how much of their animal purchases are they covering? Are they all in, or a certain percentage of their herds?
It varies. I think more of my cow-calf guys are kind of all in, because when the calves all arrive at the same time, it's easy to just kind of cover them all. But if you're buying cattle, feeding them, and on a more regular basis, some guys just kind of roll with their purchases, and other people just haven't quite figured out the rhyme and reason. It's when they think it's valuable on the lots that they think are valuable. So that's the nice thing, is you don't have to cover every head. You can cover one. I don't know why you would, but you can. So we also encourage, to roll into it potentially. If you have 1,000 head you want to cover, you could cover 250 today, see what prices do tomorrow or next week, do another 250 for the same kind of time frame. And then you'd be able to sell the whole lot at the same time if you wanted, because it would all fall within that 60 days prior to the last endorsement. So a lot of it options on how you want to do it, and how much you want, but most people kind of have a tendency to do most everything.
Now, you mentioned that Rabo has some case studies that you can provide for anyone that is really looking for an example of how it works in their operation. Could you maybe give us a little overview of what that might look like, or tell us a little bit about one of those?
A lot of those are kind of what if scenarios that would, that we've played out over the past couple of years. I know we've had some good graphics that show kind of if you just do USDA products, or if you use USDA products and marketing options, kind of how the returns look. The returns, I will say, do look better when you use other marketing options, but that's not to say that it does not have value and it's just by itself. But what a lot of these will show is if you had purchased it, in the past, what would it look like? How would it pay now? Because it is hard to get some of that information retroactively. If I want to see, if I would have purchased this last year, how would have it settled? Those are some of the things that we can provide for people that might not be too easy to find on their own.
Wonderful, wonderful. I want to ask, call out to the audience. If you have any other questions, put them in the chat. Otherwise, I'm going to start asking Cody questions on my own. And sometimes, that's fun for me, might not be what you want to know. So I guess, Cody, what I want to ask you is, in sort of preparing for our conversation, I gather that you spend a lot of time out in your truck visiting cattle producers. What are some of the things that are on their mind today, and how does insurance kind of fit into this marketplace and what they're doing on the ranch?
Well, I think, from what I've kind of seen there, it's just a little bit of uncertainty with pricing. Some of the factors and matrices haven't necessarily made sense in the last couple of recent years, as far as, quantities and values and just everything like that. So I think as we see a market that doesn't have direct lines drawn to each movement, it's a little harder to understand where movements are going to come from. So insurance products and other things like it help manage that just a little bit and reduce that worry to some degree. But I've seen, as many cattle producers are as concerned, there are as many that are forever optimistic, and know it's just going to be fine, and they're fun to work with too. I like that attitude and optimism. It's fantastic.
I think that's one of the best things about working in agriculture, is that there is a pervasive level of optimism across different fields.
It's insane sometimes, especially in my position, because I face all of the worst situations. I was just looking this morning at a list of claims that I've turned in over the past few days for hail and stuff like that. And it's, you know, that's my life, is to see the worst of the worst. Um, so it's a little harder for me to be as optimistic as they are, because I don't necessarily get to see all the big wins. I only get called when there's losses.
Well, hopefully some of those guys will help share some of the wins with you
Yeah.
and those things. So I don't see any other questions left in the chat. So Cody, I want to thank you so much for joining us. It's been wonderful learning more about LRP and having this conversation with you. We've got Cody shared his contact information. If you need that, please feel free to email us or drop it in the chat, and we'll share it with you as well if you want to have continuing conversations with Cody about LRP and want to learn more about how it might work on your operation. Cody, thank you so much.
You bet. Thanks for having me. I've really enjoyed this. And like she said, if there's anything that any specific questions you want to get a hold of me for, or a quote, or even to write an application so that when the time is right, you can do an endorsement, I'm here for you. Like she said, just drop a chat and we'll get that phone number to you. Otherwise, just look for me at Robo Ag. I should be out there on the website somewhere in the insurance department.
All right. Thanks, Cody. And
Thank you
thank you
so much.
all. Yeah, thank you all for attending with us. We are going to take a quick break before we bring on our next guest. She's DTN Livestock Editor ShayLe Stewart. She's going to really talk us through this market. I know we kind of danced around that with Cody there. He's not really the marketing guy, but ShayLe's got some great perspective on what this is all going to mean for the cow-calf producers, for the feeders out there, and what we can really do to make sense of the cattle market right now. So we're going to take about a 10-minute break. Please get yourself some coffee, and we'll be right back here at about 9:20 in the morning to really go over the cattle market outlook. Ups and downs. I'm DTN Farm Business Editor Cody Dvorak. We just got done with a great presentation from Cody Dvorak from Rabo AgriFinance talking about livestock risk protection, the insurance it provides, and how producers and how ranchers and feedlot owners can use that to sort of manage their downside risk in the markets when we're sitting around really, really high prices. And so we're going to talk about the second part the second part of that now with DTN Livestock Analyst ShayLe Stewart. She's going to come in and explain all of what's going on in the cattle market with those market prices. ShayLe, thank you so much for joining us today.
What a wonderful morning, Katie. Thank you for having me. What a great session we just heard from Cody, and how great that we get to follow it up with what the market's actually doing this week. And I'm just here to tell you, it is a great time to be a part of the cattle market, a part of the beef industry, because these prices are crazy high. Whether you look at the live cattle market, the feeder cattle market, or maybe you're looking at some of those, coal bull, coal cow markets, everything is just astronomically high. And so I'm excited to take some time today with everybody and just walk through what those prices are doing and talk about what's transpired thus far through 2024 and what we might be able to expect for the later half of the year.
All right, before you take it away, ShayLe, I want to just remind everyone, drop your Q&As in that Q&A section and we'll do a good conversation afterwards. So go ahead, take it away.
Well, like I said, good morning, everybody. I'm so thankful that you're sharing your time with us here today. And I am just so thankful for the opportunity to lend your ear, because I think that it's a good time to circle the wagons and talk about the cattle market and the beef industry, because we have so many moving functions right now in the marketplace. So without further ado, let's dive into this presentation. Let's talk about the cattle market and beef industry and get us on our way. Before we do that, I just want to share a little bit about myself and my journey to DTN and my understanding of the markets and kind of the way I view them. So I was really fortunate. My upbringing allowed me to really just appreciate the market from day one. I grew up on a cow-calf and haying enterprise in southern Montana. Later, I went to college and got an internship with the United States Cattlemen's Association, which at that internship, my job was to learn the cattle market, learn its dynamic, learn its functions, and to really just dive into its intricate nature. And so I, from a very young age, started to realize that the cattle market was complex. It was dynamic. Its market participants were sometimes intimidated by its functionalities. And so that's why I really like to break things down and share with producers what what's happening in their marketplace, because I truly believe that markets work best with active and informed participants. So I share this with you today because I want you to know that yes, my day job might be being a livestock market analyst, but these pictures here, they really depict what my life is. And so I understand that just like you, I know that it can be so frustrating when the cattle market is trading lower and there's no rhyme or reason. And I understand that it's hard that in this industry, you know, the cattle market trades really in a 10-year cycle, and 7 of those years typically do not favor cow-calf producers, and the 3 years sometimes they do. So without further ado, I just want to share with you that I really understand how complex and sometimes intimidating these markets can be. And so that's why I think it's a great opportunity to just circle the wagons and share our time this morning talking about the market. So without further ado, let's talk about the cattle market and beef industry thus far for 2024. When I first started my job with DTN of roughly 5 years ago, I had a mentor of mine say, "ShayLe, do you know the reason why the position of a livestock market analyst was created?" And I scratched my head. I wanted to give a good answer, sound sophisticated. And upon doing some thinking, I just looked at him and said, no, I don't know why. And he said, well, somebody has to make the weatherman look good. And so what a better place to start this presentation than with a drought monitor outlook and just a little bit of the weather forecast for this year and what we're already seeing. And I'm so excited to share with you that we have a much better outlook than what we've had in years past. Monday's crop progress report shared that 51% of pastures and rangers were in good to excellent condition. Look at this map and just realize how good it is across the nation. Obviously, this is a starkly different reality than what the market had last year and the year before that. And so as we move forward and continue to trek through 2024, there's going to be different opportunities. There's going to be different challenges that affect us because of our moisture outlook. Thankfully, we're going to see an increase in hay production. That's what's anticipated for the year. Hay prices are expected to be lower as well. Feed availability is going to be cheaper also from a commodity standpoint. I talked to DTN's lead analyst, Todd Holtman, earlier this week, and he said, you know, in the Corn Belt, corn prices are expected to trade this summer around the mid 4s. And also this is going to have an implication on culling cows and the pressure to do so. Thankfully, with more moisture in the forecast and our range and grasslands in better position than what they were in the past 2 years, there should be less pressure to cull cows. I think it's also worth our time to just talk about what the drought outlook looks like thus far for 2024. And thankfully, as of June 4th, just 9% of cattle were in drought-affected areas, with none of the U.S. in extreme drought conditions. Now, like I said, that's starkly different than what we saw the last 2 years, as in June of 2023, 40% of all cattle were in drought areas. And even worse than that, in 2022, 50% of cattle were in drought, with 19% of all cattle in extreme drought areas. Now, this has had a grave effect on the U.S. beef cow herd, and I know that this has been a conversation that's really circulated through our industry, and deservingly so, because the U.S. beef cow herd sits at a 73-year low. And by now, I'm sure you've had some conversations around this topic, and I think it's one that we should even, maybe further discuss this morning, because the ramifications of this are extreme. Never before have we had a U.S. beef cow herd inventory so low. I think that hindsight is a beautiful thing. We, as producers and as individuals, we love to look at hindsight because we have so much understanding. We can sit in the moment and understand what's happening before our eyes. But once you can look back on time and kind of find the intricate details and really absorb what happened, it can make more sense. And so it's funny, we'll talk about the cattle market rally of 2014 and 2015, and I sometimes feel like we give it a little bit more clout than what we're giving the cattle markets rally right now, even though cattle prices are higher right now than what they were in 14 and 15. And I think that's just because of hindsight, which is why I share this graph with you this morning. This is the record of both beef cows and heifers from 2000 to 2024. The green arrow in the middle of the chart depicts how many beef cows we had in 2014, and the red arrow on the right-hand side of the screen depicts how many cows we had just this past January. And you'll notice that we have fewer cows than what we did in 2014. We know that, right? We're at a 73-year low. But the ramifications are now affecting the feeder cattle market, the fat cattle market, and they're going to continue to do so for the next couple years until we really start to see significant heifer retention, which we may be seeing some early signs of that, but it's definitely not enough to say, by golly, it is indeed beginning to happen. But with that, we need to talk about our beef cow slaughter, because this is such a good way to measure whether or not cows are still coming to town, whether or not heifers are being retained and kept back into herds. And I know this slide is a little bit busy. There's a lot of numbers in the yellow box, but they're worth our time and they're worthy of discussion this morning. So I want you to look at the red bar. That is the 2024 weekly beef cow slaughter rate. And thus far through the year, we've averaged right around 57,000 head on a weekly basis. Now drop down to the line just below that. In 2023, for this time, we had processed right around 67,000 head on a weekly basis, so a few head more. But in 2022, remember when our drought was more severe? Remember when we had a lack of profitability? Remember when we had a lack of readily available feed resources in the country? Our weekly average beef cow slaughter was 74,000 head, almost 75,000 head on a weekly basis. So that is extreme. And so obviously we've seen a reduction in our weekly beef cow slaughter compared to 2022. But the factor that I want you to look at is the very bottom line, the 2016 weekly average. So in 2014, we had good feeder cattle prices. In 2015, we had good feeder cattle prices. And boom, by 2016, everybody wanted to be a cow-calf producer. Everybody wanted to be a cowman, because they loved the prices in which they saw in 2014 and 2015. And so at that point, cows were beginning to be kept back, and we saw the weekly beef cow slaughter only average 47,000 head back in 2016. So that's still lower than what we are here in 2024. So that's why I'm believing that really we've not begun to see the beef cow herd really build back yet. And I don't believe that we're going to be at that level for a while. Like I said, there are two main factors that really affect the beef cow inventory and whether or not we're going to be in a building phase or in a liquidation phase. And those two factors are green grass or feed availability and profitability. And I know that sometimes it's confusing because, we'll hear these astronomical feeder cattle prices, new highs in the fed cattle market, but higher prices do not guarantee profitability, because as you know, as producers, just because we're incurring and we're seeing higher prices, that doesn't mean that our profitability is necessarily better, because the cost to operate is still extremely expensive. So with that, what do we expect for the beef cow industry in 2024? Like I said, I truly believe that our liquidation has stabilized. There simply aren't as many beef cows to go to town as there were in the last couple of years, because they've already been culled, they've already been liquidated, and so we're simply just not seeing the numbers go to town, and there's not the pressure to send them to town. Now, it's kind of nice to see these cull cow prices, cull cows bringing anywhere from $18,000 to sometimes $2,000, which is just astronomically high, and there's even been some record cull bull prices this year of anywhere between, $400 and $4,500. Which is crazy for a cull bull. Some producers don't pay that for a new bull that they're going to put back into their herd for breeding stock, let alone for a cull bull. So really weighing that and realizing how strong those prices are puts into perspective just how few of cattle kind of are going to the market for slaughter and being culled on. And it tells you just how few they are compared to the years past. Now, obviously, there's some caveats and there's some reasons as to why maybe folks would choose to start to keep back some females and grow their herd, or maybe if they have the extra money sitting around, that they choose to move their business into growth mode. Like I said, feed is going to be cheaper this year, and feeder cattle prices are extremely strong. But there are some caveats to that. Interest rates are still high. We still have an economy that's stressed. And honestly, like Cody shared this morning, the market is uncertain, and that's not going to change anytime soon. That's really just becoming the state of the cattle complex, is more uncertainty, more volatility, more pressure. But the question that I kind of want to pose you with, and maybe it's something that you can, have a conversation with your friends, the local coffee shop, at the sale barn, maybe with your wife across the table this evening, is how is the U.S. cow herd going to build back? Because I really do not believe that the build back of 2024, 2025, 2026 is going to be anything like what we saw in the last cattle cycle. For one, our interest rates are so much more expensive now than what they were at that time. Secondly, our producer is aging. And for a young producer looking to get into this marketplace, it takes so much capital. It takes so much equity to get into this business. And then, like I said, there's so much volatility. that there is some risk of joining this marketplace, of joining this industry. And so I think that the build back of 2024, 2025, 2026 is going to be far slower than what it was in the last cycle. And that potentially means that there's going to be more opportunity to see these higher prices for a longer duration of time, solely because it's an Econ 101 principle, supply and demand. If we have fewer supplies and demand is still strong, prices should be high. With that, let's transition into the feeder or the fed cattle market, excuse me. And holy smokes, I don't know if you paid attention to what the fat cattle market did yesterday, but again, it traded $1 to $4 higher. And so we have a lot of exciting topics to talk about here. This chart is one that I could spend so much time talking about this morning, because there's just so much to learn and absorb and digest. So I'm just going to walk you through the basics here, get you familiar with what we're looking at. On the left-hand side of the chart, you'll see that was the fed cattle market back in 2002. Fast forward all the way to the right-hand side of the chart. That's where the market is trading today. Along the side there, you'll see the record highs achieved earlier this spring. And really, I think this puts into perspective just the difference between the 2014 and 2015 highs, which you can see the arrows pointing to at the middle of the screen, compared to what the market is trading out now, more so on the right-hand side of the screen. And like the letters in red and yellow indicate, we made new all-time highs in the fed cattle market just this past spring. In Texas, live cattle prices traded at $1.87. In Kansas, live cattle prices traded at $1.87. In Nebraska, dress cattle prices reached $3.04. In Iowa, $3.01. But the thing that I think that will potentially be the same as last year is in 2023, the fed cattle market reached its peak in June. And based on what we're seeing in the cash cattle market right now, I believe the 2024 timing scenario could be the same. And the other thing that I want to talk about on this slide is the wording at the bottom, our long lost friend, price discovery. I absolutely love, and I'm an advocate of the cash cattle market, because true price discovery is found there. And if we advance to this next slide, this kind of shows you the importance of the cash cattle market, because if you look back on the left-hand side, that's the volume of cash cattle sales in 2003, where there were at times up to 350,000 head of cash cattle trading on a weekly basis. I almost cannot get my mind wrapped around that, because it is so starkly different than compared to the reality in which in the marketplace we see today. Move to the left-hand side of the screen and you'll see that there are at times that we only see 40, 50, 60,000 head of cash cattle traded on a weekly basis. So if you like the prices that we saw just in the past screen, you might want to think about the importance of the cash cattle market and its relationship to true price discovery. And I know that it's not my position to tell you whether or not you should sell in the cash cattle market, utilize a grid, utilize a formula deal, because they all have their place. And each operation is going to be different in their marketing strategies. But what I am here to tell you is that grid and formula deals also benefit from the cash cattle market. Typically, premiums and discounts are given off of the cash cattle threshold, off of the cash cattle standing price, and then the premiums and discounts are given from there. So some food to think about. All right, transitioning gears just a little bit. Let's talk about slaughter. Let's talk about what the market's achieved thus far. Let's talk about what packers are doing in regards to managing throughput and what we're seeing. Again, the red bar here in this chart is 2024 slaughter pace thus far. And our weekly average isn't nearly as aggressive as what we've seen in the last couple of years. In 2024, the weekly average slaughter pace thus far through the year has averaged 599,000 head. Compare that to 2023, when we were at this time processing right around 623,000 head, and compared to 2022, we were processing 643,000 head of cattle on a weekly basis. So you ask the question, why, ShayLe? Why are packers processing fewer cattle in 2024 than compared to what they were in the last couple of years? Well, number one, there's fewer cattle to go around. So they're managing their margin, they're protecting their income, and they're protecting their margin management, basically, and saying, you know, obviously packers sit in a position where they have to buy cattle out of the cash cattle market or pull from feedlots, whether it's from a grid or formula deal, but then they also have to sell the meat to retailers. And so they have to walk a very tight rope there, and they have to make sure that they're pulling enough cattle to supply the retailers, but they have to balance that scale, that threshold, to make sure that they're ensuring that they're making money. So Now, obviously, they've been able to continue to run fairly aggressive processing speeds, maybe not as aggressive as what we've seen in years past, but they've been fairly aggressive given where we sit in a supply scenario because of how aggressive, how strong box beef demand has been this year. Now, on the left-hand side of the screen, you'll see our choice cuts. On the right-hand side, you'll see our select cuts. The current averages at the bottom of the screen, and my goodness, have we been fortunate that beef demand has been this strong thus far through 2024. I think it's very interesting to note, though, that the 2023 choice average for this time was $2.90. And thus far through 2024, the select average has been $2.90. That tells you just how strong box beef prices have been. Now, obviously, again, tight supplies drive prices higher, and we are expecting the market to make a seasonal top any day now. It could come, maybe it could come today on this Friday, maybe it'll come next week, but at some point the market will likely make a seasonal top. And there's another caveat to this conversation that we need to address, and that's it's fun to see box beef prices high. It's good, for the market to some degree because packers are making money, so they're able to trickle some profits down into the cash cattle market to continue to pull cattle so that they can process them for retailers. But we also have to be conscientious about where our consumer sits. And I will say, given where we sit with our economy and the inflation pressures and just how the American spending dollar isn't going as far as it was in years past, I do start to wonder and ask myself, what is the price point? What is the turning point when consumers say beef is getting a little bit too expensive? I'm going to have to shift my buying pattern, buying habits, and maybe go pick up a little bit more pork, maybe go pick up a little bit more chicken. And truthfully, the market hasn't told us what that price is. And consumers are fickle. They're tricky. They're hard to understand because these prices obviously show the fact that consumers love beef and they're going to continue to buy beef even if the prices get high. But at some point, the American consumer could say, you know what, this price is a little bit much. So that's something that we should be watching for through the remainder of 2024, given our tight supplies. This is definitely a passion slide of mine. I could talk about this slide specifically for probably 20 minutes, but I won't bore you with that. This is the weekly slaughter weights of steers that we've seen thus far, I guess across a span of time. But interestingly, the red line, the red bar is the steer carcass weights of 2024. Look on the right-hand side of the chart here. And thus far in 2024, steers have averaged 920 pounds. Compare that to 2023 at this time, when steers were averaging 899 pounds. Compare that to the 5-year average, and steers were averaging 897 pounds. And if you just look at the red line and you kind of put into perspective where we're at with the market, what we're seeing in regards to what the fundamentals are telling us, we know we have tight supplies of cattle. We know that we are current with our show list, but yet our carcass weights, they are astronomically higher than what we've seen compared to years past. And that is alarming to me because what happens when the cycle changes? What happens when we see the leverage go back to packers and cow-calf producers and feedlots are sitting with an abundance of supply and they have cattle sitting in feedlots? And packers don't have to procure as aggressively from the cash cattle market. And they just let them sit in feedlots a little bit longer than what they have here recently. What's going to happen with those carcass weights? That's going to cost a lot of money for feedlots. And so I think that this is worth noting that Dr. Darrell Peel of Oklahoma State University did a study, and he said that carcass weights have trended heavier over the last 60 years, with steers averaging an additional 4 pounds every single year. Now, if you're a feeder, you might say, well, ShayLe, I need these cattle to gain. I need these cattle to feed. I need these cattle to grade. I need them to yield. And oh man, do I understand that? I understand that soberly. But there comes a point where you can't keep continuing to feed without understanding that there's going to be a cost at some point. And the other factor, the other point to this conversation needs to be that not only is this affecting steers, but it's affecting heifers too. And if you're a cow-calf producer and if your ranch isn't, maybe getting bigger, or you're picking up more lease ground, or you've got more feed supplies available to you, you're essentially growing cattle to be bigger, and your females are getting bigger too. And I think the great way of talking about it is an engine. And if you're not going to provide more fuel to the engine, why are you making a bigger engine? That engine is going to require more costs. Do you have the ability, the wherewithal to supply that essential fuel for that engine? So some good food for thought there. I don't know if this is a slide that we love or we hate, because we love it and we hate it. We, as cow-calf producers, you kind of feel like you're seeing into their business a little bit, which, we know that they operate a tight ship. And so seeing what packers are up to, seeing what their margins are, seeing what they're making kind of feels like you're getting a little bit of a secret. But at the same time, man, sometimes it's hard to look at when you realize that packers really only own cattle for sometimes a day or two, or sometimes a month. And they're making, at times, like in 2021, up to $770 per head. But it's important that we understand where packers sit in regards to their business perspective, because love them or hate them, they're a necessity in our market. And love them or hate them, how they're doing on their side of the business tells us what could help us understand their strategy moving forward. So in 2024, thus far, packers have averaged roughly $185 per head. Compare that to 2023, it's lower. Compare that to 2022, it's lower. Compare that to what they were making in 2021, it's significantly lower. Now, they're still making more than what they averaged in 2014, but I'm here to tell you that packers are phenomenal businessmen, and they run their numbers, they run a tight ship, and they will not push their ink too far into the red. They will cut Saturday kills. They've already cut Saturday kills. And really the conversation is are they going to go to running potentially just one shift on Friday, one shift on Monday, or are they going to continue to run 2 shifts? So this will be something that we could expect from packers. I do not believe that throughput, I do not believe that slaughter will become more aggressive through the remainder of 2024, simply because that would mean that they're going to have to pull on the cash cattle market more, and that would drive cash cattle prices higher, tapping into their margin. Let's talk about our exports and our imports thus far through 2023. And if you go back 2 years ago in 2022, we had a phenomenal record-breaking year for exports. Beef demand was through the roof. And obviously in 2023, we didn't see as aggressive exports as we did in 2022. And that is expected to be the same scenario here for 2024. We do not believe our exports are not on track to be as aggressive as what they were in 2023, simply because our beef is expensive right now. The entire globe is working with a stressed economic state. And so exports are not expected to be as aggressive as what they were in 2023, and imports are expected to be greater, just simply because we are tight on cattle supplies. One thing that I do want to mention here, though, is Mexican feeder cattle imports are currently up 18% compared to a year ago, and Canadian feeder cattle imports are up 7%. Thought cow-calf producers would find that interesting. So what is our fed cattle outlook for the remainder of 2024? Well, Wednesday's WASI report said that they believe the outlook for the second quarter to average $1.86, which that's basically what the market's trading at right now at this time. The third quarter could soften a little bit as we enter through the dog days of summer. Maybe show lists are going to grow just a little bit. I'm not one to believe that we have maybe as many cattle on feed as what we believe, just simply because of where we sit with our U.S. beef cow herd and its tight supplies. In the fourth quarter, they believe will get stronger again and average close to $1.86. There's some factors that support that. There's some factors that could be a hindrance to that. On the bullish side of things, like I said, feedlots are current. And that's why we're seeing such strong prices in the cash cattle market right now, is because feedlots are current. And it's so interesting to watch the dynamics between feedlots and packers right now, because given that feedlots are current, if packers, offer them a bid on Wednesday right now, they can kick it around, they can let it sit on the table, and they can say, nope, sorry, not going to do. Come back when you offer me something worthwhile. Thursday will come around. Maybe they'll see $1 more or what have you. But then come Friday, packers typically get a little bit more aggressive because they know time is ticking before the week's end, and they get more aggressive and they buy cattle. And the other supportive factor to the market right now, and which I believe could keep fed cattle prices strong, is just our domestic demand. We've seen phenomenal domestic demand from our consumer, and I believe that we will continue to see that. Now, on the other side of the token, there are some risks associated that could be a hindrance to the fed cattle market. And that is, like I said earlier, reduced throughput. Packers are smart businessmen, and they run a tight ship. They will not run their margins into the red very long for too far. And so if they need to, they're going to cut throughput, which obviously would mean that cattle are going to be sitting in feedlots a little bit longer. Now, I believe that we're current enough to where we have a little wiggle room there, to where if they cut slaughter, if they cut throughput, that is not going to gravely affect us, like say the next week. We're current enough. That's not going to be the issue. It's going to become an issue if it's endured for multiple weeks on end. And then the next factor is if our economy remains stressed and if consumers start to show that they are taxed and they're not going to continue to support these high of beef prices. So with that, let's transition into the feeder cattle market. I know that a lot of you are cow-calf producers, and my goodness, if you watch the Corn Belt Classic this week, you are anxious for the next couple of slides, and I'm here to share them with you because I love watching the feeder cattle market. It's one of my absolute favorites. So let's dive into it. But before we dive into the Corn Belt Classic, what happened on Superior's first auction sale of the year? Let's talk about where the feeder cattle market sits. This might be a boring chart to look at, but it is so important. On the left-hand side of the chart, you'll see feeder cattle prices starting at 2023. On the right-hand side of the chart, you'll see where the feeder cattle market is trading currently. And I tell you what, this chart perfectly explains where we sit at in our industry in regards to prices and cycles, because cut the market off at the 2016 and cut the market off at 2022, and that tells you that's when prices were stressed. That tells you when supplies were great. That tells you when cow-calf producers, were really having to work diligently to market their cattle and scrap for the money that they were given. But then we started to see beef cows liquidated and prices just continued to get higher and higher and higher. And that's where we're at currently on the left-hand side of this chart, or excuse me, on the right-hand side of this chart. But specifically, let's talk about what happened earlier this week on Superior's Corn Belt Classic. Now, here are the Region 2 steer prices, and I'd be happy to get you the sale results of any region that you find interest in. But Region 2 specifically is Montana, Wyoming, North Dakota, South Dakota, Nebraska, Colorado, and Utah. And this is comparing the green bar is 2022, black bar 2023, and the red bar is the prices that we saw just earlier this week. And believe it or not, the market was higher again than compared to prices last year. Steers weighing anywhere from 500 to 740 pounds traded $17 to $35 per hundredweight more than what they did in 2023. The only price group that I saw a slight decrease in was steers weighing 750 to 790 pounds, and they were down just $10 per hundredweight. But what's interesting is that when you remember that steer prices jumped anywhere from $59 to $76 per hundredweight in 2023, and then add the additional price increase that we just saw earlier this week for 2024, that means that steer prices over the last 2 years have increased anywhere from $66 to $101 over per hundredweight over the last 2 years. Utterly incredible. This sale right here really shows us what the market's going to do through the summer and into fall, and tells us that the market is going to be strong. There is demand. Yes, feedlots are paying a lot of money for these feeder cattle, but they know that if they want to play the game, they know that if they want to feed cattle, they have to buy the feeders. And there's simply not as many of them to go around as there were in years past. And so they have to take the risk, they have to be aggressive, and they have to dally onto them and hope the market stays strong. And we saw that earlier this week. Now, there were some differences in this year's Corn Belt Classic than compared to what we've seen in years past. And Kyle Show really laid it out for me pretty easy. He said, really, the biggest differences that we saw were all about delivery terms. And so that makes sense. You and I know as producers that freight costs are expensive. So if you're an operation that's close to your feedlot, maybe you're going to get a little bit more money just simply because it's not going to cost the buyer as much money to truck your calves to the feedlot. And the other big factor was shipping terms. There was obviously bigger slides and weight stops. And that makes sense given that these prices are so high, historical highs. Feedlots are saying, hey, we need to tighten these terms here. And so that was evident in the sales earlier this week. The other thing that I thought was worthy of noting, in Region 2, there were fewer heifers consigned. And on one hand, you could say, well, ShayLe, that to some degree, that makes sense because there's fewer cattle overall. So, of course, there's going to be a direct relationship to fewer heifers marketed. Okay, I can understand that. But on the other side of the token, there's the potential that there's beginning to be heifer retention seen in outfits across the West. Now, I'm not going to stick my neck out on the line and say that that's a trend that I could say, 60% of producers are doing or what have you, but it's something to take note of, that there were fewer heifers consigned and that this could be the early stages of heifer retention. One thing that I think that Cody really hit beautifully on in the presentation before this is he talked about risk. And I would be an absolute fool if I did not talk to you about risk in my presentation today, because these markets, they're moving faster, they're moving quicker, they're more volatile, they're more pressured by outside factors. I remember when I first started tracking the cattle market, I, to some degree, believed that only cattle related things affected the marketplace. You know, sure, the economy, imports, exports, things like that, but their external factors are becoming much more of a weighing factor on our marketplace. And unfortunately, we have to pay attention to that. And I think that a good depiction of how much risk the market can absorb and how it can fluctuate in trade is what happened with the avian influenza outbreak earlier this March. So on March 25th, we got the first word that, avian influenza was being spread. And within a month, within 4 weeks, the market fell $11.85. You want to talk about some risk? That's pretty hard to swallow when you're sitting at your house and you're feeding your cattle day in and day out, but yet your market is just melting away for no other reason other than fear. You know, what is avian influenza? How is it going to affect the cattle market? What's this going to do to beef cows? Are we going to have more regulations, more stipulations? How is it going to affect, consumers if it's in the meat? None of that ended up being the case, but because the market didn't know at that split second, it decided to trade lower. And I hate that this is a reality. I hate that this is the case, but market volatility isn't going to go anywhere. If anything, our market's going to become more reactionary, because what are markets? Markets are people, and people are reactionary. And then given that this year is an election year, I'm cautious. I'm very noting of that, because I think that could add some disruption to our marketplace. I don't know that for sure, but it's something that I'm keeping in the forefront of my mind just because I know it could be a factor. So, I'm not here to tell you how to market your calves. I'm not here to tell you what risk management option you should utilize, but I am here to tell you that risk is a big factor in our marketplace, and that to some degree you would be silly not to protect yourself. So then the fun question that I want you to go home with is how do you market your feeder cattle? When do you market your feeder cattle? And what are we seeing? And really, those are tough questions to answer without knowing what your break even is and without knowing how much risk you're willing to assume. And so I want you to look at this. This is just the August feeder cattle chart, but go ahead and look under the feeder cattle bracket. Look at the August feeder cattle contract. It was trading earlier this week at 257, and then jump down to the May 2025 feeder cattle contract. There's not much difference in these prices. And I think that that's really because the market is just like you and I, and it's wondering what's coming next. I'll trade then, I'll be excited then, I'll be dynamic then. And the market's just kind of waiting on its fundamentals to tell it where to go. Thankfully, the Corn Belt Classic was a dynamite earlier this week, and we saw phenomenal prices there. And so I think that there's a potential that the market just continues to rally through and into the fall. Now, when I say that, I want you to understand that even in bull markets, we do see lower days. That is not for me to say that, the market's going to trade higher from this date over the next 90 consecutive days. That's not what I'm saying, because even in bull markets, we have lower trading days. But what I'm here to say is that I do believe the trend is going to remain strong, just simply because of supply and demand. But when you begin to talk about how you're going to market your feeder cattle this year, I think that you first and foremost, you need to know what your break even is, and you need to know how much risk you're willing to assume. Because if you just continue to chase this market and you look at it day in and day out, maybe minute by minute, hour by hour, or day by day, and you're trying to make your marketing decisions based on that, you're going to be emotional yourself, and that is just, it's so taxing. Whereas if you know your break even and you say, you know what, I'm going to make money here, and I'm going to go ahead and choose to market my cattle here because I know that I will be profitable at this price point, that's much more of a logical, discerning way to go about marketing your cattle. And so I'd encourage you to go about marketing that way. So there's some hurdles and headwinds. This market, I'm so thankful to be a part of it as a producer myself and as a market analyst. I'm eager and I'm excited to see what the rest of 2024 accomplishes. I'm eager and excited to see what happens to be our market in 2025 and moving forward. That's not to say that there's not some obstacles that we could have to jump through, run around, or hurdle. Obviously, interest rates, they are a big determining factor in today's marketplace. Our relationships of imports and exports aren't ideal. Obviously, we're not exporting as much beef. We're importing more beef. Feed costs, thankfully, with our drought outlook and our moisture that we've received thus far through the year, our feed situation is better than what it was in 2022 and in 2023. Labor and freight continue to be extremely expensive. I am concerned about inflation, and I am concerned about the U.S. consumer spending habits, and I am concerned about what the election could mean, not necessarily on what candidate is picked, but more so just the politics surrounding it and how the election itself could, bring some hesitancy and cautiousness into the marketplace. And so I share these with you because these are the factors that I'm continuing to watch day in and day out. But more than anything, folks, I just want to encourage you. And I just see so much opportunity on the horizon of this marketplace. And I'm here to tell you that I'm going to be watching these markets well through 2024 into 2025 in the near future. So I'm excited to ride with this rally with you into the upcoming years. And so with that, I will turn the mic over to Katie and answer any questions that you have. And as always, feel free to email me, call me. I'm here to help you the most that I can.
Please, just a reminder to all of you watching, please drop your questions in the Q&A and we'll get those answered for you. I do have a couple of them for you, ShayLe, so let's go ahead and dive on in. First one, do the cattle markets follow a similar seasonal trend as to like corn and soybeans do, seeing highs in the summer time frame and cooling off in the winter time or October, November?
So yes, the cattle market does run with its seasonalities. Its seasonalities aren't necessarily the same as the grain complex, but we typically see, like for the coal cow market, prices are highest in the spring when supplies are the lowest, and obviously prices are the softest in the fall when we have an abundance of cattle being marketed, when coal cows are, preg checked and go to town. So yes, there are seasonalities. They're not the exact same as the grain market, but yes, the market does very much so respect its seasonalities.
Okay, that's always good to know and good to keep in mind because those seasonal patterns are sort of one of the few reliable factors when a lot of the market is, very, very volatile and can move on a lot of unknown things. Yeah. Okay, so our next question for you, ShayLe. How big of an impact has the dairy on beef program had on the cattle market, in your opinion? As an all beef cattle producer, cattle feeder, as well as cow calf producer, I'm of the opinion that it has had a big negative impact on the prime premium, and I don't like it. What do you think?
I understand that because I believe that the statistic I read earlier this year said that roughly 20% of all calves marketed are beef on dairy. And, it's affecting so many, whether you look at the grading perspective, whether you look at the programs in which feeder cattle can be marketed, or even if you look at the genetics on the side. I understand that it's frustrating to some producers. I understand that it's an opportunity to the dairies, but I'm here to tell you that I do not believe that that's a trend that's going to lessen moving forward. If anything, I believe it's going to become a bigger factor moving forward. And so unfortunately, if it's not something that you're that fond of, I'm here to tell you that it's probably going to stick around in the marketplace, and if anything, become a bigger factor moving forward.
All right, please just drop your questions in the Q&A. I'm going to keep going. ShayLe, you talked a little bit more about, fewer heifers were consigned at the latest superior sale. Maybe we're in the beginning stages of heifer retention and maybe some of that herd build back. Why is that? Why do you think that's going to be slower this time? And what are some of the challenges to the herd rebuild this time around?
Really, Katie, I think it all comes down to equity and the cost of getting into the marketplace. I've talked to many feedlots, and they said they're going to their bankers and asking up to about a third more for their operating costs this year than what they were in years past. An additional third of their entire operating cost is what they're needing to pay for freight, labor, feed costs, everything absorbed in that. And so it is an expensive business to get into. And with interest rates being as high as they are, it is expensive. And if you're a young producer, yes, there's so much opportunity because there's some older producers aging out of the business, or maybe they just don't want to take on the risk that the market currently has. But you need a good banker to do that, and you need a good business plan to do that. And sometimes it's just tough to swing when maybe you don't have a whole lot of capital sitting behind you, or maybe you don't have, land already in your name and you're running on leases, what have you. But I just truly believe that the economic basis in which we're sitting in here today is so much different than what we were in 2014. And it just takes a lot more money to go around, and that can be a hindrance to producers. And obviously, you know, when people were buying $3,000 bred heifers last year at the market's peak, they got spanked by that. There's no other better way to say it than they got spanked by that. You know, that female takes a long time to pay herself off, and heaven forbid if she comes up dry, she comes up open, she doesn't raise a good calf, then you have years of her, you know, being in the herd, if you're going to keep her around, of her actually paying her away. And so I think folks learned a little bit of a lesson in 2014. And like I said, just the economic state, it's different than what it was in 14.
And, you know, with prices where they are today, it's not an easy choice to keep that heifer back either.
Oh, yes, the opportunity cost foregone if you choose to keep that female. It's a tough one to swallow. We run registered Semangus cattle, and obviously genetics are a big deal in our business. But when I start looking out at the pasture and, you know, putting dollar signs on each female that we retain and we keep, you know, you look out there and you say, man, am I making the right decision? But
it's something every business has to make, and that's part of the cattle business.
absolutely.
Yeah. Okay, we've got a little bit more time for questions here. I will take this one. This says, ShayLe, do you have any commentary we can subscribe to? And yes, we can. You can go to mydtn.com, start a free trial there, and get all of ShayLe's market commentary there. Tell us a little more about what you do on a daily basis, ShayLe.
Oh, my privilege, my opportunity. Thank you for that question. So I get to track the live cattle, feeder cattle, and lean hog markets for DTN and its customers. So what that means on a daily basis is I watch the futures market and I watch the cash markets, and I write comments for our customers because you guys are busy. You don't have time to be watching the market minute by minute. And so that is my job. I tell you what the market is doing in midday comments and in closing comments. I send out a couple quick takes throughout the day. And then I also have a weekly blog of just kind of what I choose to write on what's affecting the market. And I have a bi-weekly column. And so I would love the opportunity to serve you. And if you have any interest, please sign up. We would love to bring you on board of the DTN team.
That is one of our favorite things here at DTN. We have a full team of analysts. We've got our lead analyst, Todd Holtman. We've got a couple of other grains analysts. We have a weather commentary that goes along with that too. So our subscription-based services have a lot of information that you cannot get on dtnpf.com. It is for our subscribers only. I know for our grains products and for our cattle and livestock, we have our marketing strategies that we do every day as well. ShayLe, can you tell us a little bit more about those and the DTN 6 factors and how we kind of look at the markets through that perspective?
Absolutely. So sometimes I just get so used to what I do on a daily basis that I forget to share. Oh yeah, I do strategies too. But yes, I do a market strategy every single day. And so that's just basically taking a look at the market, and we have our 6 factors of how we address the cattle, or how we address all the markets. We do it for the majority of the commodity markets, but we look at the risk. We look at the 5-year trading range. We look at what non-commercials are doing. We look at what commercial traders are doing, and we assess, hey, is the market in a neutral trend? Hey, is the market in a slightly bullish trend? Is it in a, you know, slightly downward trend? What is the market doing in just a quick few-minute read? That way you don't have to spend, you know, hours studying the complex. It's just a quick flash for you to get the information that you need, not spend a whole lot of time diving through the weeds trying to hunt for the data, but just a quick, you read the 6 factors, you read our commentary, and then you can run from there.
It really is a great and efficient way to learn about the markets, to really make it fit into your day in a functional pattern. That's really what we try and do here, is we try and help give those actionable insights that people can take back to their businesses and make good decisions. That's really one of our goals as a newsroom, as an editorial team. So that is all the questions I have in our chat, ShayLe. Is there any sort of final thoughts you would like to share with us?
You know, I guess the last thing that I'd like to leave everybody with today is, again, the phrase of markets work best with active and informed participants. And if you are somebody who's, you know, enjoying these prices like all of us are, but you are not being a disciple of the marketplace, I promise you, you are leaving money on the table. And at some point, the market will catch you, and it'll be costly. And so I hope that you tune into the markets, however you do. If you want to become a DTN subscriber, I would love to help you with that, and our team would as well. But I'm here to tell you that we need to be aware of what the market is doing, conscientious of how it's trading. That way, we can hopefully hand down our businesses profitable businesses to the upcoming generations. Because if we're not discerning of what our finances are doing or what the market's doing, we will never be profitable. And so my advice is, again, markets work best with active and informed participants. So do your job in being active and informed.
All right, thank you so much, ShayLe, for joining us today. That was wonderful insights into the market. It's my pleasure to have you here again. All right, and with that, we're going to take a very quick break. We're going to bring in DTN Livestock Editor Jennifer Carrico. We're going to talk a little bit about what we've seen today, kind of wrap it up, get some insights from her on what DTN's doing with its livestock coverage. Hang tight, we'll be right back. Welcome back. I'm DTN Farm Business Editor Cody Dellinger. I'm really excited to welcome into the studio our livestock editor, Jennifer Carrico. It's wonderful to have you with us today, Jennifer. What did you think about what we've been talking about today, about livestock risk protection and about the cattle markets? What are some of your biggest thoughts?
I think we had some really great insights from both Cody and ShayLe. As being a cattle producer my whole life, it's always good to hear those kind of things. We're obviously have a great markets right now. I think everybody's positive, but yet cautious. Because we all know that there's trends that happen and ups and downs in the markets. And so while we're enjoying having great prices, we're like, how long is this going to last? And when is the cow herd going to start expanding?
Yeah, that is one of the big questions that's out there. ShayLe gave us a little bit of her perspective on that, but it is a big question, this cow herd expansion. Not an easy one to answer.
No, it's not. And personally, my calf crop is all bulls this year, so I have to really think, what am I gonna do if I'm gonna expand my herd at all? But I think the prices have been so high that producers are not necessarily willing to just go out and find the heifers to put back in their herd, and the heifers have been going to the feedlots also because of the higher prices. So it's just kind of a give and take, and when is that going to happen? And there's so many other factors involved as well.
Now, what were some of the things, I know as a team we've talked a lot about LRP. What are some of the things you took away from Cody's presentation, and maybe something for producers to think about with these insurance products?
Yeah, for sure. It's interesting to see how the number of people that are using LRP has expanded, and I think that maybe has come with a little bit from what we've experienced with the COVID fluctuation in prices. They want to have some protection, and historically the cattle producers haven't had that. Even though LRP's been available, maybe they haven't thought that it was something that they could use. So I think it's been interesting to see how we're seeing the numbers increase and more people using that.
And it sounds like the program's changed. The program changes have really resulted in making it a little more user-friendly. Having those premiums paid at the end is actually a really interesting development, that you can potentially pay that with the indemnity payment if you get it. So
Right. Interesting
timing to be talking about it as well with these high prices in the cattle market.
Right. Yeah. So I think it's like Cody said, anything that's of value is worth insuring and not waiting until after you've had it for a while. So I think it's something that producers really need to think about. It's something that not just the feedlot can use, but also the cow-calf man can use, or man or woman can use to protect their value as well.
So what are some of the things that you are thinking about, and as we go into the summer timeframe, what's on your radar?
Well, certainly it's good to see the drought monitor is looking way better than it has. But I think that that isn't necessarily going to just, the moisture isn't going to just automatically cure everything. Yeah, we have more hay, but there are places that we're in such extreme drought that it's not going to just be overnight that's going to be cured. Or even the wildfire areas, it takes them a few years to get their grasses back to where they really can be confident in turning cattle out again. So There's a, we hope that the moisture continues to come. We know that there's differences I'm no weather analyst, but, we hear some on our team talk about El Nino and La Nina and how that affects what our weather patterns are. And it's certainly nice to see more hay, so then maybe those hay prices will go down a little bit so that we're not, I think I heard ShayLe say, just because prices are great doesn't mean profitability is great.
That is a really good point, and something that we like to talk about a lot at DTN because we are about keeping our producers in business. That is my specialization in this area. And so one of the things we are seeing is the corn market is coming down, or at least that's the trajectory as we build back a surplus. What's that mean for your cattle feeders?
Well, obviously, that helps with the profitability side. On the other side of it, a lot of the cattle feeders in the Midwest are also farmers, so it's kind of a give and take. But obviously, the bigger feedlots are liking to hear that their input costs aren't going to be as high.
So one thing I do want to ask you about, because you, in addition to being our livestock editor and a cattle producer yourself, you're also a mom. Mm-hmm. And we're talking about consumer confidence and consumer levels with ShayLe. She mentioned it there. What's the feel you get on the inflation and beef prices in the grocery store?
Well, in addition to raising cattle, I have sold beef. And I think that, we've seen a little bit more of a shift of people wanting to know where their beef is coming from. But it'll be interesting to see when I tell the people that I sell the beef to, well, it's going to be a little higher price this year. And some of them get a little bit, maybe I'll just have a quarter instead of a half. And others are like, nope, we still want the same amount. So I think, the consumer has through the years has learned how to know more about where their products are coming from. And so that helps us as producers know what they want.
And what I would add is, in my generation of moms, that is a very big thing that is on the plate. And when we get together, we talk about the price of groceries. I've never once heard anyone mention the price of beef being too expensive. And then I tell them that I buy half beef at a time, and they ask from whom and how can I do that? Because they do see it as a value versus buying it, per cut at the grocery store. And it's really just part of that's the demographic where I live and the group of moms I have, that is something we are able to do, but it is something that I see a lot of my generation really leaning into as a trend, is buying and sourcing their beef directly from the producer.
Yeah, for sure. And I think, it sounds like a lot all at once. But if you piece it out, it's really the value is there when you know where it's coming from and you know that it has the quality you want.
Yep. So before we wrap, do you have any sort of final thoughts or takeaways for our viewers today?
I think it's important to keep an eye on different things when it comes to weather, when it comes to the markets, and certainly, we have people at DTN that can help, but there's people all across the U.S. with different companies that like what Cody does, and those things are good people to be involved with, and just keep an eye on things. It is pretty volatile, and like we've said, you want to protect your investment.
Markets move fast, weather moves fast, things can change quickly overnight, as we've seen time and time again in the agriculture sector. So I want to let you know again, once again, if you want to subscribe to DTN, you can go to mydtn.com and check that out and see what kind of subscription products we have available. You can get some advanced weather forecasts, market analysis, and deeper things to help you run a better business. And so I want to thank you all for joining us today. We've had such a great time talking about the cattle market with you, and I hope you have a very prosperous day from DTN.